welcome to Market Open Direct Connect, a webinar series for companies to tell their story, why it's compelling and why it's an opportunity to invest. I'm your host, Stuart Walters, and we're joined here today by Kane Marshall, Managing Director and the CEO of Australian Oil Company Limited, ASX code AOK. By virtue of Q&A, Kane will provide an update on the company's operations in California and future strategic direction, as well as answer any questions relating to the rare earth divestment. Attendees will have the opportunity to ask questions directly to Kane during this webinar, and you could submit any questions via the Q&A tab at the bottom of your screen. It's time to introduce our guest. Kane, welcome to Direct Connect.
Morning, Stu.
Quickly, in recent weeks, the company's gone through a name change from Sagasco back to its original Australian Oil Company, the new ticker AOK. What brought about this change?
Well, firstly, there's, and I know we'll discuss at some point the transactional space, but there's very few juniors focused on opportunities domestically. We're obviously got a main undertaking in California. And if people want to Google Australian oil companies, this would be the first one that comes up. So it's also, going back to the roots of its founding name, I think it's a good name. We've got operations in the Sagasco Basin. But really, this is all about diversifying the portfolio. It's an Australian company with Australian directors, with largely almost all Australian shareholders. So, and the ticker speaks for itself. I think you've got to have a catchy ticker. I think you need a good name. You need strategic direction and a decent, bunch of officers that can drive that strategy. So, from that perspective, it's pretty simple. It articulates the future of the company, and that's where we are. We're focused on the future, not in the past.
I know you've been extremely busy internally over the last 6 months, and while there hasn't been a lot of news out to market as such, can you provide an operations update for us?
Yeah, so I guess we'll talk about the rare earth divestment and the NITO matters shortly, but we're in the process of streamlining all of our operating costs in California. They've historically been way too high for a market where we can have depressed gas prices of $1.50, and we're currently in a heat wave, and we really need to be positioned to capitalise on opportunities where, gas prices are elevated in heat waves. So that's the first thing we've been doing. Secondly, we've been looking at infrastructure acquisitions. We've signed an agreement with PG&E, we're the biggest infrastructure group in California, to double our production from a number of our record wells. So that's a dual strategy to not only increase production, but also reduce our costs and actually make that segment part of the business profitable. Historically, it has not. And so that's a big focus for us. So we've also been looking at, what can be done in California. There's been new statutes introduced by the governor there, which effectively make new drilling difficult. And so you have to focus on existing wellbores to sidetrack out of. Really the bolt-on opportunity is going to be sidetracking out of existing motherboards, increasing production, optimizing costs. And that's a big part of it, of what we've been doing, plus, the transactional space and what's been happening there. Now, by virtue of the fact that we disposed of the Philippines, that was the main undertaking of the company, and we were required by the ASX to vet any new transactions by them, which takes a significant amount of time. So we started that process late last year. So a lot of the things that we were looking at, we've been backwards and forwards with the ASX, we've done our due diligence, and it's just taken a lot more time. So that's largely where we're at in terms of, the cornerstone properties in the portfolio, and also, diversifying and building out that portfolio consistent with the new branding and strategic direction.
Can you add any more, shed any more light on the Philippines?
Yeah, so as part of the settlement on rare earth, I think the view was, and particularly the feedback from shareholders as well, and the board, that, Cadlau was marginally economic. I don't think Blue Sky's really got much intent on the exploration side of things, focused on Cadlau. So I think in terms of focusing on the future, I think royalties were just part of what was thrown in the pot to reach settlement and just move on, and particularly sever ties with that relationship, which really hasn't generated any return on equity for shareholders since that association. So that's it for us. We're effectively move on from the Philippines. I think things are going to get more difficult to do there, and we need to focus on jurisdictions where we can actually get things done and focus on, swing for the fences type stuff that the ASX as an exchange rewards juniors. So that's it for the Philippines. We move forward. I don't think we'll have any other further foray into that jurisdiction.
Before we look at Australia, what about a California operation update?
Yeah, so as I said, we've streamlined the process of streamlining the costs, increasing production, and then really it's weighing up the bolt-on opportunities there. When I say bolt-on opportunities, upstream opportunities, whether they're material enough to move the stock. I think things like stranded discoveries and other things that we've looked at, which are typically single-digit BCF, really you're not rewarded in capital markets. You need to look at the juniors and what's made their stocks run and what's generated liquidity, and that's drilling sizable things in jurisdictions where you can commercialise. So, that's part of what we have to be some real discipline and due diligence around what those new projects are. Because really we're a junior, we're going to be recapitalised in November, and all the bucks really need to be as efficient as possible and deployed as efficiently as possible into those type of big hitting opportunities.
An update on Blue Sky Resources? Yeah,
so they're obviously still a shareholder. We've reached settlement. As far as the board is concerned, there'd be no further association with any new ventures or projects. We're being in production opportunities on the ASX. There's some terrific stories out there. You look at Brookside, Kalima, and it's been very difficult for the market to reward shareholders for holding positions in those stocks. So I think moving forward, it's going to be partnering with like-minded peers, and there's not a lot of them around. But certainly in the transactional space, people are starting to talk about, what commodity spaces you need to be in as an investor. And that's gold, uranium, gas. Oil's looking very weak on the technicals. So, the move is from the past into the future.
And it's been noted here by shareholders in the last quarterly, you stated you invested into Exclusivity to acquire a number of permits in Australia. Can you give us an update on this one?
Yeah. So up until recently, in fact, probably since last year, I was working very closely with Ted Jacobson, who was the founder of people will remember Discovery and TAP, where he was managing director, and Carnarvon, where he oversaw the stock run up to 80 cents in the beat-out Basin. So I spent a lot of time, with Ted over the last year at a workstation at his house. He's very sick, sadly passed away. And basically looking at the big discoveries onshore, particularly in the Permian and the Perth Basin, and existing discoveries in the Cooper and the Patchawarra, for example, those type of systems must exist elsewhere, and they must be, in his words, elephants, and the juniors need to be chasing elephants. So, as part of that process, we've identified two opportunities. One is significantly mature enough for us to probably move on very soon. The exclusivity is around assets that have identified some of these really big plays. I'm talking, multi-TCF, near infrastructure, and just trying to position ourselves with what's going to be happening next in the gas markets. They're just going to be as bad in WA as the East Coast. You talk to Synergy, Alinta, all of them, Perth Energy, AGL. There's a real issue with contracting gas longer term. There's a real supply issue here. We've seen what's happened in the Perth Basin with Mineral Resources and Strike. Very complicated reservoirs to develop. A lot of uncertainty around LNG export and how that's going to affect development. So us entering exclusivity are going to be predominantly around assets we've already matured terms, and we are satisfied we've done all our due diligence. So we're pretty heavy on due diligence because, nature of our market capitalisation. And we're focused on gas gas in Australia. Oil was secondary. I think oil's looking particularly weak. A lot of the audience would know on the technicals it could easily go to $40. In Australia, we have one refinery at IOR, and we've got to be in things that are sufficiently mature enough to be drilling, or low cost seismic drilling in the next year or two. And I think those type of opportunities are now starting to come out of the woodwork, because we're finding that big companies are having a lot of headaches with the costs, capex associated with these bigger developments. The juniors are really focused on their own stuff, be it overseas or North America or Zimbabwe, wherever. So we've identified a number of opportunities under exclusivity. It's probably all I can say at this stage, but they'll be material enough to be consistent with the strategy, and more than likely be consistent with board composition changes as well.
What are you seeing in the transaction space domestically, particularly onshore? And how do you see ADOK placed to take advantage if any opportunities are out there?
Yeah, so a lot of people have been scorched in the recent Booth well, and we're seeing that particularly Perth Basin, but we're also seeing it in in Queensland, in the Surat as well, that the exploration phase is okay, but the development is going to be very capex heavy, full of a lot of uncertainty, and there are commitments that need to be met in both the larger companies and smaller companies' portfolios, that there hasn't been a lot of work put into those, and a lot of the concepts that Ted and I worked on are really, we can see those, a lot of this acreage, and so now we're seeing the players actually approach us. So that part of the cycle is here now, where we're seeing private companies, juniors which are undercapitalised and probably got a few headaches in terms of contingent liabilities in their books, looking for help to try and get things drilled. So that is what I'm saying. We're seeing a lot of, well, certainly I am anyway, having a lot of discussions about whether we can come into positions, operate and drill wells, do it a lot cheaper than what other peers are doing, because they're outsourcing a lot of the well engineering work. And that's really where we're placed. We've got that ability to be able to move into those spaces, potentially take equity and use very little of our own working capital and promote them. So that's certainly changed onshore. We're starting to see that things, you look at Hancock, you look at MinRes, the type of assets they've got, they're going to be challenging to develop, given the size of them, the complexity, the depth of the wells. And then there's other things floating around in there where, regulators not going to give you extensions forever. And, smaller type pools, which are still in the hundreds of BCF, are incredibly material for a company like us. So that's what I'm seeing in the transactional space. Companies need help. They need people who understand how to keep costs down and understand the plays.
And you've been pivotal in building portfolios in Perth and Cooper Basin before. Are you seeing any opportunities there?
Cooper Basin, not so much. It's really leased out. I don't know where the likes of Beach and Santos really are. I don't think they know. Santos got its hands full with Alaska. Beach has had budget blowouts on Waitsia. But maybe not so much Cooper Basin, but there's other things there in those companies that I think that they consider non-material, which I would consider material for this company. So I don't see a lot of opportunity there, but I can see opportunities in the Perth Basin, and that's largely because we've been approached in acreage, that I've looked at in the past, and the fact that there's huge rigs, these triples are in the Perth Basin, a total overkill for some of the wells that need to be drilled. I mean, I think some of these well costs should be half what they're being drilled at. So yes, the long and the short of it, yes, I think those opportunities are there. We're having those discussions now, and the people we're looking to be part of this company going forward are we're discussing those ideas with them. So I think it's a great part of the market, really, because juniors are finding it harder to get capital. We know where gas is going longer term, and we'll be one of the few that are going to be recapitalising and actually identify those opportunities and actually build out the portfolio significantly in our own backyard.
A lot of people understand the regulatory challenges with offshore acreage and the restrictions placed on operators. What are your views? And do you see commercial opportunities in that space for juniors like AOK?
Look, I think federal waters is going to be very difficult. The latest licensing round, I like to say, is effing ridiculous, where you can't shoot new seismic. So you're wasting your time there. We've seen what's happened with Santos and Woodside, Scarborough and Barossa, the amount of environmental activism that's been going on there. Very difficult to get things done. A lot of the rigs have disappeared from the country. So I think offshore, you've got to be fairly niche, and you've got to potentially look at state waters, although they'll sort of operate off the back of the federal regulator, those sorts of opportunities you could probably commercialise. So I think federally that's not for us. I think it's just too difficult. You can't get funding. You're already seeing the likes of Finder, diversifying their portfolio into Timor-Leste. And so I think that's a difficult space. But I think offshore in state waters, in certain areas, you can get things done so long as the prizes are big enough. But federally, I don't think that's going to be for us. And I think that's going to remain a challenging environment until the next election.
Have you got a timeline on any new projects?
Yeah, so as I was saying before, we started late last year, engaging the ASX, doing a lot of due diligence. So I would certainly like to think, the next month or two, we'll have new opportunities here. We're going to be recapitalised in November off the back of this Red Earth settlement. So having money helps, because that's going to help us probably secure other things. So I'm pretty confident that within the next 2 months, or probably shorter than that, we're going to have a better idea what the board composition looks like and what those sort of additional opportunities in the portfolio look like to complement California.
We've had a question come in around the chairman. Will there be a chairman role filled soon?
Yes. So we're looking at filling that fairly soon, and those, whoever that candidate will be someone that understands oil and gas and understands deals in this space.
Another question's come in. AOK will have relatively low funds after finalising of divestment. Will that level of funds be sufficient to do something of significance?
Well, I don't know too many juniors that are going to have $2 to $3 million in the bank in November. But what you've got to be doing in this market is you can't go in and just scorch money on overheads and personnel in other jurisdictions which are 14 hours behind. You have to get opportunities, you have to work with like-minded people, and you have to get other people to fund it via equity and use as little as your working capital as possible, because my view is markets are going to get tougher. Opportunities are going to come up all over the place, and you want to be using that cash to secure those opportunities.
From a successful perspective, what does the next 12 months look like in being successful for you?
Look, think new projects, optimize California, and a drilled one well, at least in that space, maybe 2.
Short and sharp.
Yep.
Lastly, Kane, your overall views on the market. Obviously, we've been in a challenging time for some time now. What do you think needs to change?
What needs to change? Look, I think market's going to get tougher. Look at technicals. It's been a bit weak the last couple of days, but doesn't look like inflation's going away. I think central banks starting to cut, but they're also bolstering their gold reserves. I think oil and gold have been correlated in the past. Whether that's going to be the case in this cycle, I don't know. If you want to be focused on being strong in the next year, given what's coming at us, I think you've got to look to seek strategic cornerstone investments. You've got to look at new projects with gas. They've got to be big. They've got to be near infrastructure. And I think you've got to stay away from any marginal oil projects, because I think you're in a world of trouble.
We have had one more come in. Are you at all concerned regarding counterparty risk, Blue Sky Resources, regarding the recent divestment?
Yeah, well, why wouldn't you be? Yeah, so that's the risk. But at the same time, that was the easiest, least resistant path for us to take. I will add, though, that there is interest in some of the properties that we had. So we could always go down that path. But as far as we're concerned, we think that risk is as minimal as possible. And if it is a risk, I think we can manage it.
Thank you, mate. Really appreciate your thoughts and questions that came in from shareholders and attendees today. That is it. That's everything that's come in. For more information about Australian Oil Company, head to the company LinkedIn and Twitter pages at the moment. There is a new website under construction, which will be available soon at www.australianoilco.com.au. And I said will be available very soon. Thank you to everyone for attending today's webinar. Some great questions submitted. If there is a company you would like to hear from, please send me an email, stuart@marketopen.com.au, and I'll reach out to that company on your behalf. Kane, thanks for your time today. Keep up the great work and look forward to chatting again soon.
Pleasure. Thank you.